Aptos blasted onto the scene in October 22, rising quickly in market cap. It's caught the attention of many, yet most people don't know how it's derived such value and few understand its tokenomics. In this video, I'm going to break it all down for you so you don't have to do the research I had to do. Aptos in general has been dubbed the Solana killer. It went live on its mainnet called Aptos Autumn after 3 years of development by a team of 350 developers. Now, out of that team of 350 developers, Mohammed and Avery are the only two listed on the website, and they have come from the Facebook team that was creating Libra, or which then changed its name to DM. So they've come from the Libra or the DM team, and it seems to be a little bit of an extension of that project, but more in a decentralized way. Now, Aptos Labs is based in the USA, and the Aptos Foundation is actually based in the Cayman Islands. Aptos uses a language called Moved. Now, Move is based on Rust, but it's an awful lot simpler. Now, this allows for apps from Solana and from Flow to easily migrate over to its own Move virtual machine, which is a competing execution layer to the Ethereum virtual machine. It can handle 160,000 transactions per second. Now, this isn't just a simple transfer to transfer transaction like most blockchains when they issue their transactions per second are. This also includes more complex transactions such as smart contracts. Now, the Aptos blockchain apparently can also be compliant with regulations, and any token that's created on the blockchain is totally controlled by its issuer. That means that dApps or anyone issuing a token onto Aptos can actually mint, burn, and freeze tokens at will. So what about the general tokenomics? Well, Aptos uses delegated proof of stake. The token utility also includes governance, which is currently limited to validators, but it's due to be extended to delegators as well. The APT is the digital token used for transactions and network fees on the Aptos platform. So when people use Aptos blockchain, they need to pay a fee in the APT token. Eventually, network fees will also be deployed so that the cost of using Aptos will be proportionate to the cost of deploying hardware, maintenance, and node operators. So it won't just be fees. There will be a base cost for actually deploying apps on top of Aptos. So let's hop over now to some actual data that we can look at to back all of this up and see where it's all going. Now, if you want to learn how to do an analysis like this, do stay tuned till the end of the video and I will tell you a little bit more. Okay, so I've navigated to CoinGecko to get the basics of the token metrics for the Aptos token. Now, at the time of recording, it is ranked 32 in CoinGecko and it's trading at 14.24. The current market cap is 2.4 billion. The circulating supply, so this is only what is in circulation, is 168 million, but the total supply at the moment that's out there is 1 billion and 20 million. The trading volume we can see here at 205 billion, and we can also, or 205 million, and we can also see the fully diluted valuation as being 14.5 billion. Now, the fully diluted valuation, we can see here an explanation that this is the maximum supply or multiplied by the current price. Now, we don't have a maximum supply because they're going to continue to issue tokens. Now, they do burn their transaction fees, but with a fully diluted valuation of 14.5 billion and a ranking of 32, if we compare that to Cardano, and Cardano is ranked number 7, this has a fully diluted valuation of 18 billion. Now, that is only 4 billion more than the Aptos token, which already suggests to me that the Cardano system is much further along. It has stuff being built on it. It has a native stable coin now. And it's only 4 billion off, and this is ranked 32, whereas Cardano is ranked number 7. So straight away off the ranks, to me, this Aptos token is slightly overvalued at the moment. Now, don't forget, none of this is financial advice. We are just doing a total review of the project so you can understand how it's deriving its value, the information that we're given to derive its value, and you can make up your own mind on this. Now, if we look at the price, as we know, the token only launched in October, and it launched on exchanges at 13.73. Now, it did take a dip, and we do know that 20 million tokens were airdropped to early users. Now, who these early users are, I haven't got a clue. They could have been investors, they could be anybody really. But the price since then has risen and is slowly starting to come back down again. The all-time high was 1992, and that was 28% away from the price that it is now. So let's go into the tokenomics tab here on CoinGecko. And CoinGecko doesn't have tokenomics for all tokens, but they do have some from Aptos. Now, we'll be able to see this again in a few minutes when we go to the Aptos website. But here's the allocation of tokens from the project. So we have 13.5% that went to investors. We've 16.5% going to the foundation, and we've 19% going to the core contributors. Then we have 51% going to the community. So when it is fully distributed, there will be 51% in the community, which supposedly is going to make that decentralized and should stop the 51% attack by these over here. But it doesn't look very decentralized with that sort of a split to me. So the initial distribution, as we can see, 51.2% of the community, 19 to core, 16.5 to foundation, and 13.48 is going to the investors. Now, not all tokens get released immediately. This is their supply schedule and how the new tokens are going to be distributed. Now, don't forget that there will be new tokens as well, and that's going to decrease by 1 point something percent over the years. So when it launched, we launched here, and we can see the first tranche of tokens is really going to start kicking in October next year. So that's when the first tranche of tokens is going to get released. Some of the investors will be able to, well, the investors don't really get too much then, but we can see the first tranche there, staking rewards and that. And then come June 24, February 24, we've got more of a tranche, and this is steadily increasing. Now, there's details on this that I will show you later on of how it's going to actually be released. So it was released, as we said, on the 12th of October, and the initial supply is 1 billion tokens. It's an inflationary type emission rate since Genius. The supply of Aptos may increase in line with the staking mechanism. Currently, the maximum reward starts at 7%, and it is going to decline by 1.5% until it reaches 3.25% annually. All reward amounts and mechanisms can be modified via on-chain governance. And the chart above does not include anticipating staking rewards that are going into the supply schedule as well. So these staking rewards are actually liquid immediately, and these can be sold immediately. So this distribution for the staking isn't exactly correct here on this. Now, let's talk about the funding and who actually funded Aptos. So 200 million was raised in the seed round back in March 22. Now, there's some big players in here. We've got Multicoin Capital, we've got Three Arrow Capital, and Three Arrow Capital, as we all know, are actually gone. We also have Tiger Global Management, Block Tower Capital, FTX Ventures, also gone, Paxo and Coinbase Ventures. So they were the first round of funds that were raised. Then there was an initial round raised in July 22, and this was headed up by FTX. Now, as we all know, FTX are gone, but they were a large investor in here. Now, I don't know, because FTX are now gone and because Three Arrow Capital are gone, what happens with them funds? Are them funds brought back to pay creditors on FTX and Three Arrow Capital? That I don't know. Jump Crypto is also being accused of being involved in the loop with FTX Ventures and have very, very close ties to FTX Ventures. But we do have other investors in here. We've Multicoin Capital, Griffin Gaming Partners, Circle Ventures, and Apollo, among others. There was an undisclosed amount raised then by Binance Labs. So Binance Labs invested heavily into this as well. Now, I'm not sure why they invested so heavily. Was it because everybody else was investing that they seen that they also had to invest? Or was it down to some of the fundamentals on the actual blockchain? Because here's something really interesting to know. The tokenomics of this project wasn't released to the public until just before the launch of the token. So these must have had some sort of insider's information. Now, the transactions per second and the fact that they include smart contract transactions and not just a transfer of a token, native token from one wallet to another, being so high could have been part of it. Maybe it is the actual team, because the team came from Facebook. And in fact, they'd been developing since 2017 before Libra got totally dropped. And then the team continued on with this project. So they had years and years of experience in building, and with Facebook they would have had access to a lot of research tools and information. Then there was another undisclosed amount raised by Dragonfly Capital as well on the 28th of February. So that's the tokenomics per CoinGecko. By the way, if you're finding this video to be of value, please do smash that like button and subscribe to my channel so you don't miss any more of my videos. Let's have a look now at their tokenomics on their website. Now, the tokenomics on their website, it goes through the initial thing. It was 1 billion tokens. Each token has 8 digits of precision, which in Bitcoin, we know Satoshis are the smaller units, and here they're called octa. We can see the breakdown of this, and then it talks about the distribution schedule for the community and the Aptos Foundation. Now, the majority of the tokens, so the pool of tokens is designed for ecosystem related items such as grants, incentives, and other community growth incentives. Some of these tokens have already been allocated to projects building on Aptos and will be granted upon completion of certain milestones. A majority of these tokens are held by the Aptos Foundation. So there's quite a considerable amount that are actually held by the Aptos Foundation, and a smaller portion is held by Aptos Labs. And these are going to be distributed, as it says here, over a 10-year period. So at the start, 125 million was available to support ecosystem projects, grants, and community growth. There's 5 million for the Aptos Foundation. And then 120th of the remaining tokens for the community and the foundation are anticipated to unlock each month for the next 10 years. So there should be 130 million Aptos available in the foundation wallet, from what I read from that. Now, there's also the distribution schedule here for the core contributors and investors. So no Aptos will be available for the first 12 months. And then 348 will unlock the 13th month after mainnet launch. It'll be at November 2023, and each month thereafter up to including the 18th month. And then we've got more tokens being released for another 19th month after the mainnet launch, until all the tokens are unlocked on the 4-year anniversary of the mainnet. Today, 82% of the tokens on the network are staked across all categories, and the majority of these are currently locked in accordance with the distribution schedule above and not available for release. But where are they staked is a question that I have still not been able to answer. And if they're staked, are they earning staking rewards on top of this? And if so, who is it that's actually earning these staking rewards? And I think that is quite important to understand. The anticipated token supply changes. So don't forget now, it says down here that on-chain, the transaction fees are currently being burned, but they may revisit this with on-chain governance. All of this can be changed with on-chain governance, and only the validators have governance rights at the moment. And from what I can gather, Google is a validator. God only knows who else is a validator. Maybe FTX even though the Ghana is still running a validator for all I know. But token holders who stake their tokens to a validator achieve staking rewards. Staking rewards are split between the validators and the stakers and are not subject to restrictions on distribution. The maximum reward starts at 7%, which we spoke about earlier, and it declines by 1.5% until it reaches 3.25%. And this is expected to take over 50 years. Now, all rewards and reward mechanisms are also modifiable via on-chain governance. I can't emphasize that enough. That is so important to understand. So let's have a look now. I went over to Token Terminal because Token Terminal is one of those websites that I look at when I'm doing my own research on tokens. And Token Terminal actually doesn't have that much information available on them. We can see all of these values here are NA, so the data is not available yet. So we can see what their revenue has been, how much they've actually made. We can see what's in their treasury. We can see their daily active users from here. Now, what we can see is active developers over the 30-day average, which is coming in at 50. So nowhere near the 350 that it had mentioned. And there's the code commits. Now, the code commits are up in the last 30 days, and there's 627 code commits in the last 30 days. Down in the key metrics, there isn't really much other information to see here either on Token Terminal, which is a bit of a pity. So hopping over now to the Blockchain Explorer, and here we're on Aptos Scan. So this is a product by Etherscan. And we can see here the total supply and the transactions. The current transactions per second is showing up at 5.46, nowhere near the number that they had mentioned. If we hop over to the statistics on this one, we can see the unique addresses. Now there's 3.1 million unique addresses here already. That's a massive, massive amount of unique addresses. Now it's really, really hard to tell from this how many addresses are actually active and are holding tokens. There isn't really any information that says this. And to get 3 million active users so quickly, to me, seems a little bit dubious. Now, bear in mind, again, this team comes from Facebook and they know the metrics that people need to be looking at. And unique addresses is like users. And of course, it's going to be a metric that people want to keep an eye on. And they know this from Web2 business. So I don't know if this has been overinflated somehow from their side. And it's very, very hard to tell. Jumping over here now to the rich list as well. And in the rich list here, we have the Aptos Foundation wallet. Now, in this Aptos Foundation wallet, there's only 52 million Aptos tokens there at the moment. And we know if we go back to the tokenomics here, that 125 million should have been issued plus 5, which is 135 million. So where are the rest of the foundation wallets? It's impossible to find the foundation wallets. And if we go back to home and I search by Aptos, we can see we get one address, only one address. If I type in foundation, we still only get one address. So I'm not seeing another wallet. Now, also, when you go into this wallet and you look at the transactions in this wallet, there's been 49-cent transactions, 281 received transactions. And this is kind of what is bugging me a little bit, because with all these received transactions, there's two sizable transactions, but then we have all these other 499 Aptos being transferred over by all these different wallets. Like, what are they trying to do here? Because this just creates a web of confusion and nobody can track where the actual funds came from. Now, we can have a look at the large transfer amounts and we can see these are two separate wallet addresses that they came from. And when we go into these large wallets, we don't see that they have much in them at all. And again, if we look at the transactions in here, so let's go to the stats in here, there's 19 received transactions. And again, with these, they're small amounts, again, causing this
web of confusion. So let's go back to the rich list here as well. And what I find peculiar about this rich list is that it's really making things look like it is being so evenly distributed. And to be honest with you, I don't think this is a true reflection. And we've seen from the Aptos Foundation wallet how they have funds spread out between loads of different wallets that are transferring 5 here and 5 there. So accumulate, if we could get all of these wallets and accumulate them together, the percentage in there would be much higher. And we should see a much higher amount, because the only amount that should have been issued is the 20 million that were issued, that were released, airdropped to early users, and the amount to the foundation. So let's go to the Aptos Explorer, and this is the Aptos Lab Explorer, and we can see the validators here. They've got 104 nodes. Now, as I said, I don't know who's running these. I do know that Google is running one of them, but we've got more than 10% of them in my home country in Ireland, which I found rather peculiar. We've got another 12 in Germany, and we've got 13 going on in South Korea. Now, to be honest, the South Korean doesn't surprise me, because when I look at some of the communications from the team and the AMMs that they've had, a lot of them are focused around South Korea. If we go in here now to their analytics, what we can see is that they're saying 80%, over 80% of the current token supply is actually actively staked. So does that mean that I'm right in saying that the foundation tokens are staked and are earning a yield on their staking, that they're earning staking rewards on their staking? And are Aptos actually running some of these validators? So again, it would be really, really interesting to find out who all of the validators are. Now, if we scroll down, we can see operator addresses. So we see Chainbase, Hashcell. We can see these different names in here. We can see the locations of them as well. But what's interesting to see is lots of them have very much the same amount of voting power. It does decrease as you go down, but right up here at the top, lots of them have actually the same amount of staking power in there. Now, if you go to their staking documentation, it doesn't tell you how much Aptos you actually need to stake to set up a validator. They do have a deep dive, but again, in that, I couldn't find anything in the deep dive. So it doesn't actually say how much you need to run a validator node in here. And if you try to run a validator node on a decentralized system, will they allow you? And so forth. So all of that gives rise to me for some dodginess going on in terms of the tokenomics, where they're trying to be, to me, secretive. They're not being transparent. They're not being open. But again, I'm just presenting the information to you as I find it. And if you do find more information on this, please do leave a comment below. Let's talk about the Aptos ecosystem for a moment, and who's building on top of Aptos and who's actually partnering with Aptos. So one of the first partnerships was a bridge, so people could bridge their Aptos tokens from an exchange across to Aptos itself. And Layer Zero Labs provided the first bridge to Aptos, and they're still running that bridge, but there is a 3-day transfer window if you want to bridge funds back off Aptos to an exchange, which to me seems a little bit excessive and makes it difficult for people to quickly move funds around if they want to move funds around. Aptos is also a partner with Google, and this includes Google Cloud running a validator for Aptos. Now, in terms of people and centralized organizations running validators, I do see this as a problem, especially since the validators on Aptos actually have the right to vote on the different governance structures. And if all these big major central players are the validators on Aptos, well, that could obviously cause a problem. Aptos has also selected Google Cloud as their preferred infrastructure provider for its ecosystem. This is bringing us back to Web 2 problems of 3 companies providing the global storage solutions. We have decentralized solutions for this, like platforms like Kudos and that could actually offer a solution. Aptos has also partnered with NPixel, a Korean AAA gaming studio, and this will make Aptos the Web3 home for their Metapixel gaming universe. And Aptos have stated in AMMs and different conferences that they want to partner with more tech giants. And these tech giants, seemingly from the current partnerships that they have, are going to be traditional Web2 type tech giants. Now let's hop over to CoinGecko and some other websites to have a look at some more of the ecosystem of Aptos. So first, we're going to look at the DeFi element of the Aptos blockchain. And currently at the moment, there is 65 million locked up in DeFi protocols. Now, 65 million, we can see the increase in it here. We've got 47.7% actually locked up in PancakeSwap, which we would all be familiar with. We can also see that we have liquid staking here. And I'm wondering, is this where the liquid staking is happening for the tokens that the foundation are actually holding? We've also liquid staking down here as well. But we've got 65 million in there, and we have 8 million of this is liquid staking, another 8 million, another 1.5 million of it is liquid staking as well. And they've said that 82% of it is staked, and that does nowhere make up nearly 82%. So what makes up the balance to make it 82%? Again, this is just raising more questions than it is answers for me, because the figures don't seem to be adding up. Jumping back over to CoinGecko now, and in CoinGecko, what I have done is filter down by the Aptos ecosystem. So we can see all the players that are involved here in the Aptos ecosystem. And many of them are familiar with PancakeSwap, Trust Wallet, Multichain, Math. I'm familiar with many of these. And some of the tokens have been doing quite well. But then if you scroll down a little bit further, what you'll find is some tokens that have no information for, no tokenomics information for. Now, because I'm a little bit dubious about the value of the Aptos token at the moment, this is where I would be spending my time and my attention, because these protocols, these dApps, haven't yet released a token, and they may do so in the future. And there could be forthcoming airdrops, and these tokens may even outperform the layer one, the actual base token on the Aptos network. For example, we've got the Pontum network, and the Pontum network, if we go in and have a quick look at what it is the Aptos. These are funded by Aptos. So they're a liquidity swap, and they also have a wallet as well. And we can see these are being backed by quite a lot of people, including Aptos. They're saying they have 187,000 people already in their community, what they do, about their liquid swap, about their wallet, and so forth. So these apps, these are the types of things that I would be looking at now on this blockchain instead of the native token, to see where the value might actually come in the future. So overall, do I think Aptos is worth its current valuation? Well, to be honest with you, I actually think it's overpriced. There is a huge amount of centralization issues with the likes of their partnership with Google Cloud and using them as their infrastructure. There's also then the heavy amount of investment that they got and how that's actually going to be released. And the fact that they're kind of saying they want to work with more tech giants in this, and these tech giants most likely are going to come from the Web2 sector. Now, of course, we want to migrate people from Web 2 to Web 3, but do we want to centralize Web 3 the way that Aptos is looking at centralizing it? I think Aptos are making a bit of a trade-off in the trilemma, in the scalability trilemma, and they're going for speed and security and not so much decentralization. in terms of their ecosystem isn't absolutely huge at the moment. And one of the things that I would definitely be looking at will be the tokens that are going to launch on top of Aptos. And we've seen some of them when we were looking at the ecosystem. And quite often these could outperform the price of the token of the main layer 1 or layer 2 blockchain. In this case, Aptos is a layer 1 blockchain. So I'm not fully convinced that Aptos is currently worth its value. I actually personally believe that it is overpriced, but do take in mind that none of this is financial advice at all. Now, I did say that if you stuck around till the end of the video, that I would tell you how you can do an analysis like this. So if you click the image on the screen now, it's going to bring you to a playlist of do your own research tools in the crypto sphere.